Reserve report shows credit card debt reached a record high in the U.S.
So this morning, we are digging into how this is impacting the economy on the local level. Let's bring in ABC Action News reporter Keely McCormick in the studio with us this morning. Keely, break down the numbers for us.
Well, James Dia, good morning. That report shows credit card debt rising nearly 5% in the third quarter of this year to reach a record high of $1.08 trillion. So the question is, how did we get here and what happens next? I sat down with an economics professor and a credit counselor to get the answers.
I think that why we're starting to see record debt levels, especially record debt in credit cards, is really because we're coming out of the pandemic years.
That $1.08 trillion is pandemic-related debt. As people were uncertain about jobs, income, and the future of the economy, many racked up credit card charges to help them stay afloat.
Maybe not necessarily having enough income and having to supplement that with kind of the short-term borrowing that credit cards represent.
And although it feels like the pandemic is in the past, industries are still recovering. I spoke to a local credit counselor who tells me they've seen a 45% increase in the number of people reaching out to them for debt help in the last year.
Here in Florida, the biggest impact has been the increase of rent, the increase of housing costs, and this has caused individuals to compensate with credit card debts.
He says those high housing prices are unique to Florida, especially in the Bay Area. As for how those national numbers are impacting Florida's economy, Vargas explained the Sunshine State relies heavily on money made from tourists. But as more people work to pay off credit card debt, less people will vacation and spend money in Florida.
Anytime you have these huge debts and the money that you're just kind of pouring into this sinkhole, that's taking away consumption and spending from other parts of the economy.
So what happens next? Snipes says he expects that number to continue to climb and the U.S. to reach another record high because of Christmas spending.
As debt goes up and up and up, I mean, is this going to imply a wave of bankruptcies? Is this going to imply a drop in consumer spending in the coming months? It's really hard to predict exactly where this is going to go.
He says if you're dealing with credit card debt, the best thing to do right now is make a plan and do not get comfortable making just the minimum payment.
If you're just making minimum payments, you're making very little giveaway on those debts.
They say try to find an interest rate that's relatively low and isn't going to change because interest rates are expected to rise in the next few months.
Any kind of debt that people are holding when interest rates go up, that's going to make that debt more expensive. That's going to make that debt harder to pay.
And I know debt can feel scary, but there is help available. Both people I spoke to say the best thing to do is make a plan with the professional. I looked into some free resources to help with that and put them on our website at abcactionnews.com.